What's up, guys? Steve Zogany here from Keller Williams, Philly's real estate agent. Today, I'm talking with Mike Tavani from Guaranteed Rate, one of the absolute best mortgage professionals I've ever had the pleasure of working with. I'm going to give you guys a lot of value today. So what I'm going to be doing, I'm going to ask Mike some rapid fire questions, and then we're going to he's going to give us some answers on what he's good at, which is the mortgage world. And then we'll wrap it up real quick. So Mike, first question, I'm going to bring it to you. Tell me more about the three most common types of mortgages that you come across in your career.
Perfect. So the three most common mortgages available in today's market are conventional, FHA, and the VA loan.
So what's a little bit about each one? So like what's the little bit difference between?
So conventional is your more preferred and common loan, typically anywhere from 20 to 3% down. If you're putting less than 20% down, you're paying private mortgage insurance. FHA is your government insured loan, very typical that those are 3.5% down and a little bit easier on terms regarding your credit score. And of course, lastly, you have your VA loan, which is a loan for all of our military personnel and veterans of the U.S. military services.
Got it. Okay, easy enough. That's good. Awesome. Okay, cool. So rapid fire number two, we're going to say, tell me a little bit about debt and what debt means to an ideal, I guess, debt amount for when it comes to qualifying for a mortgage. Like what debt is too much and what's not?
So debt to income ratio is probably the more important and influential factors of getting approved for a mortgage. And it's important to note that when we're looking at one's debts, we're looking at them from a monthly perspective, not necessarily a balance. So we're looking at the cash flows, which is why the monthly payment of your mortgage, student loans, car loans are so important, not necessarily the balances. Everything is geared towards the monthly cash flow of the property, what you're making per month versus what you're spending per month.
Got it. So like, what do you have like an ideal debt to income ratio?
A good debt to income ratio, anything below 43 to 45 is preferred. There are outlets that can go up to 50 and 56%.
56% of the total income of the house?
Exactly. Well, your total debt. So your total debts of basically life would be the combination of your house debt, car debt, credit card debt, and student loan debt.
So basically the monthly debt can't go over, over a 56% of the household income in certain situations. Is that what you're saying?
Correct.
Got it. Okay. Got it. Okay, so a lot of another thing is number three here. A lot of people talk about their credit score and what's the good credit score to have. So what would you say is a great credit score to get in order to get a good rate, and what's the minimum credit score to get that at least qualify?
So I would say if we're looking at a bar, it's always better. There's a nice little natural level of being above 700. 720, 740, anything above a 760 is considered perfect, but they do work in kind of 20-point score increments. The minimum for the conventional loan is a 620. The minimum for the FHA is a 580. And of course, the underwriting criteria gets a bit more strict once you get into those lower minimum score levels.
Okay, cool. All right. I learned something every day myself, actually.
There you go.
Okay, so number four, what should buyers know before speaking to you?
Really good question. So the first thing, and basically the only thing I ever discuss on our first pre-approval call, is just the goals of the transaction. The prospective buyers should have an idea of what they want to spend on a monthly payment basis and what they want to spend out of pocket to acquire the home. So literally just a better idea of their goals specific to the mortgage numbers. Once we have a monthly payment goal and a funds available or cash for closing goal, we can really work to put them into the best loan program in the preferred sales price range where they'd be comfortable with their mortgage numbers.
Okay, easy enough.
Easy enough. It's a very simple call. It kind of takes a lot of that pressure off the pre-approval off. And once we determine that we are in a comfort level with the homes they're looking in, it's basically feasible and affordable for them. That's when we kind of turn to phase two and getting them approved at that amount.
Okay. So see, it's actually not as hard as we all think this mortgage thing is, right?
Well, just a simple phone call, nothing more, nothing less.
Nice. Okay, so cool. And then last thing, the most common question, this is just for me, I'm curious because I don't see your side of the deal all the time. So what's the most common question that you get? I know my common questions, but I want to know what are people talking to you on the phone? What are they asking you?
The most common question we always get right out of the gate is, what is your rate? And it's super important to note that, several factors that go into pricing and interest rate.
Mike, you just broke up.
Credit score, yeah, credit.
Mike, you broke up just a little bit. Can you just start that question?
Sure. So the credit, what is your interest rate is the most common question that we see. It makes sense. People want to make sure that they're working with a lender who isn't ripping them off or giving them an above market rate. And, it's important to know that there are several different factors that go into pricing that interest rate. The common ones being, property type, condo, single family home, multi-unit property, obviously credit score. We have property. We have the down payment, which you prefer. And then, of course, the program, conventional versus FHA versus VA. Every single one of those factors can produce a different interest rate. And it's our job to, fully take a look at your entire credit file and then make the best assessment at that time.
All right. Easy enough.
We're always here to give you the lowest rate. We have every incentive to get you the lowest rate on the market.
Okay, cool. Well, that's different. That's a question I never have to deal with. So that's nice. That's why we have you. So, okay. So, that's pretty much it, Mike. I know you're a pretty busy guy. So I don't want to take up more than like 5 minutes of your time. So I do want to personally thank you for taking the time out of your day today. I will be leaving your contact information below this post and this video so people can reach out to you
Awesome.
and kind of experience the glory of Mike Tavani that I have had this pleasure of experiencing.
Thank you, sir. It's been a pleasure to join you here. I appreciate all the love.
No problem, Mike. I'll talk to you soon.
Have a good one.